Welcome to Q News Deep Dive. Today, we're taking a close look, a really focused look at the global quantum computing market forecast. We're talking the next 3 years, 2025, right through 2027.
Yeah.
We've been digging into this pretty comprehensive survey of, I think it was 82 QC companies.
That's right, 82.
And we're trying to get to the heart of the big question, the what everyone's asking. Is all this quantum hype justified? Or, should we maybe be bracing for some kind of correction, maybe even this quantum winter people talk about?
Well, let's start with the big picture, the sort of financial context. It's a market that's definitely moving fast. The global quantum computing market, QC, it was estimated around $1.07 billion just in 2024.
Okay, about $1 billion.
Yeah, but here's the headline number. Analysts are projecting this really robust average annual growth. We're talking 27% per year.
27%.
Wow.
Exactly.
Compounded over the next 3 years. And that basically almost doubles the market size, pushing it up to about $2.2 billion by 2027.
Okay, hold on. 27% growth year on year. For a technology this complex, this sometimes theoretical, that suggests just massive confidence from the people actually building these things. It's not just like small steps forward. That sounds like a boom.
It does.
So what's making the suppliers so optimistic? How do they see getting over $2 billion in just 3 years?
It really seems to be this internally driven supplier confidence fueling those projections. The providers, the companies making the tech, they are extremely bullish right now. We're seeing 41% of these QC suppliers estimate that their own revenues will jump by more than 25% in 2025, and that's actually up from the previous year's survey.
So growing optimism.
Definitely. And maybe even more telling is the drop in companies expecting things to stay flat. That number just plummeted. It was over 25%, like a quarter of firms expecting flat revenues last year. Now, looking ahead to 2025, it's down to just under 10%.
Okay, so fewer people think it's stalled. They think the growth curve is really kicking in.
That seems to be the general feeling, yes. Early adoption moving into a higher gear.
And one really interesting thing here, how they're delivering the technology, that seems to be changing quite dramatically, right? Because for years, QC felt like it was almost purely a cloud thing. You tap into the quantum computer remotely.
Right, over the internet. The standard cloud model.
But now we're seeing this kind of massive pivot towards on-premise installations, hardware on-site.
That's a huge shift. And that parity you mentioned, the idea that cloud and on-prem revenue could be nearly equal by 2027, that's genuinely surprising to a lot of people.
It really changes the market dynamic.
It fundamentally does. And just so everyone's clear, on-premise means the actual quantum hardware, the machine itself, is physically installed right there, locally, in the client's own facility. Analysts are now expecting these on-prem activities to account for something like 46% of the entire QC market in 2027.
46%. That's huge for localized, complex hardware like this. Why? Why do these big clients suddenly want the machine sitting in their building? Is it about integration or maybe security? Because honestly, installing a cutting-edge quantum computer in your own data center sounds like a massive headache compared to just using a cloud API.
That's where the sort of strategic why comes in. It's not just about convenience. This shift really reflects how much control and security matter to the major buyers. Think governments, defense contractors, big R&D labs. They need absolute control over the environment, the data, everything. And crucially, they often need to integrate this new quantum system very tightly with their existing classical high-performance computing or HPC setups.
Okay. So latency matters, security protocols. If it's super sensitive work, cloud might introduce barriers.
Exactly. Those become real hurdles when you're dealing with complex, highly sensitive calculations.
And the implication here is that the big money, the revenue growth, is coming from these massive, probably very expensive single system sales, not lots of small cloud subscriptions.
That's right.
Can you give us a feel for what one of these big on-prem deals looks like in dollar terms?
Absolutely. We have some concrete examples. Look at D-Wave. Their fiscal year 2024 bookings shot up past $23 million. That was a 120% jump year over year.
Wow.
And it was driven largely, the reports say, by a single system purchase.
One machine.
One big on-prem deal. Similarly, Urera landed a major contract, $42 million, to deliver an on-premise QC system to Japan's AS Research Institute. So yeah, these multi-million-dollar infrastructure deals, they're really the engine driving revenue right now, much more than, say, modest cloud access fees.
Which brings us neatly to this kind of central financial paradox, doesn't it? We just heard about huge deals, $23 million, $42 million, a projection towards $2.2 billion. But we also know this industry is still deep in R&D mode. The hardware is incredibly expensive to build and run. Can you put the sort of the balance sheet reality, this loss leader phase into perspective for us?
Yeah, it's stark. It's basically a high-stakes gamble funded almost entirely by external money right now. The vast majority, I mean nearly all QC companies, are showing significant net losses that just dwarf any operating revenue they bring in. Take Company A from the survey data as an example. They posted about $10.8 million in revenue for 2024. Sounds okay, right?
10 million, yeah. Not bad for emerging tech.
But their net loss for the same period, $201 million.
Whoa.
Okay.
That's almost absurd. They're just burning through cash at an incredible rate.
It's phenomenal. I mean, put it this way. For every dollar that Company A earned in revenue, they lost roughly $20 trying to build the future of computing.
$20 lost for every dollar earned.
And it's not an isolated case. Company B had higher revenue, about $43 million, but their net loss was even stupider, $331.6 million. They are basically operating in a state of, well, subsidized R&D. It's not a self-sustaining commercial operation yet.
Right. So if they're losing hundreds of millions a year, that projected growth to $2.2 billion. It's not really being fueled by customer profits right now. It's fueled by, well, sheer faith from external backers.
Pretty much.
So who are the real financial backers keeping this quantum race going? Is it fair to say this is less a normal commercial tech market at the moment and more like a giant government and venture capital subsidy program, just trying to bridge that huge technical gap?
That's actually a perfect way to summarize the current stage.
Yeah.
Yes, the core funding isn't coming from sales. Look at the numbers. 52% of companies rely on government-provided R&D funding.
Half of them. Okay.
And 45% are getting venture capital VC money. But here's the crucial part about the private funding. For those companies that do get VC investment, it accounts for, on average, 65% of their total funding input.
65% of their total cash flows from VCs.
For those firms, yes. The system is almost entirely dependent on this non-revenue capital flowing in.
The scale of these investments must just be enormous then, to cover those staggering losses we talked about. Do you give us a sense of the size of the checks being written, say, in 2024?
Oh, the scale is definitely escalating. It's dramatic. Quantum startups overall raised about $1.5 billion in VC funding in 2024 alone.
$1.5 billion, just VC.
Yep. And the average deal size has really jumped. It's now around $30 million per deal on average. Compare that to just $12 million per deal back in 2022.
So bigger bets, more confidence from VCs maybe?
Bigger bets, certainly. And on the government side, look at Sequantum. They're getting a massive $620 million injection from the Australian government to deliver a QC system by 2027.
$600 million from one government.
Yeah. And in the private sector, Continuum just completed a huge $300 million equity fundraise recently. So you're seeing these really large strategic inflows of capital designed basically to keep the lights on, keep the R&D going, until hopefully those utility-class machines finally arrive.
Which makes sense, given the complexity, the costs, this reliance on outside money. Partnerships must be absolutely essential. Nobody could do this alone, right? Financially or technically?
Absolutely fundamental. The data shows what they call a collaboration mandate. Get this. 83% of suppliers partner with other suppliers.
Okay, cooperating with competitors, essentially.
Yeah, mainly for technical expertise they might lack or sometimes for shared access to clients. Then 74% partner with government research organizations often. That's tied directly to getting access to that crucial government R&D funding we mentioned.
Makes sense. Follow the money.
And 71% partner directly with the end users, the actual customers. That's vital for getting real-world testing, feedback, refining the product.
Okay, so if we tie all this effort back to the client side, what are these end users actually trying to do with quantum computers right now? And which specific applications are expected to generate the most revenue by, say, 2027?
Well, the focus is still pretty much where quantum computing shows its sort of natural strengths. Modeling and simulation, that's expected to stay the #1 algorithm type by revenue in 2027, about 19% of the market.
Simulating molecules, materials, that kind of thing.
Exactly. Optimization problems are also big, around 15%. AI-related quantum algorithms, about 14%. But here's a significant new development. The rise of hybrid QC algorithms. They're projected to be around 15% as well.
Hybrid algorithms. Okay, for listeners maybe newer to this, that means mixing quantum processing with classical computing, right? Using both together.
Precisely.
So that 15% focus on hybrid, is that kind of a pragmatic sign that maybe pure quantum applications aren't quite ready for prime time on their own yet?
I think that's exactly what it signals. It shows a certain engineering maturity, maybe.
Hmm.
The idea is use the quantum chip for the really hard, computationally nasty part of the problem, like calculating specific molecular interactions. But then use classical supercomputers to handle the overall workflow, the data management, the control, maybe parts of the optimization. It reflects the reality today that getting useful results often means a smart partnership between both computing types.
Okay, interesting. And the industry sectors driving this demand seem to line up perfectly with that strength in simulation.
They really do. The clearest concentrations are in chemicals and chemistry. That's projected at nearly 49% of end-user focus, almost half.
Wow.
Right behind that is internal R&D in quantum technologies itself, companies building the ecosystem. That's nearly 48%. Pharmaceuticals is also climbing fast, around 35%, again, reinforcing that focus on molecular modeling, drug discovery simulations.
And finance.
Hmm.
I remember there was a lot of early buzz about using QC for financial modeling, portfolio optimization.
Yeah, interesting point. Finance has actually seen its share of interest drop quite significantly in the projections. It went from around 30% down to 21%.
What do you think that is?
Well, one interpretation is that perhaps the finance sector is realizing that the specific quantum algorithms needed for their really complex problems might be further out on the technical roadmap than they initially hoped. The chemistry and materials science problems seem a bit closer to potential quantum advantage right now.
That makes sense. The focus is where the potential payoff seems nearest. But let's zoom in on why companies are investing now, especially if, as you say, the tech isn't fully mature. Are they expecting guaranteed profits right away?
The motivations are really mixed, and it kind of highlights the paradox of this market. The top two, let's call them practical motivations, are one, wanting to implement new types of algorithms that just aren't possible on classical computers. That's 56.5% of users. And two, real concerns that classical computing systems might just be hitting a performance wall for certain critical problems in the future. That's 51.3%. So they're kind of buying a hedge against future limitations.
Future-proofing, essentially.
Exactly. However, and this is really a key risk indicator, I think, almost half of all the end users surveyed, 47%, admit they are still exploring the technology purely for the sake of exploration.
Just kicking the tires.
Pretty much, with absolutely no expectations of getting a near-term advantage or deploying it for real work anytime soon. They're maybe keeping up with competitors, investing in basic strategic R&D, learning the ropes.
Okay, 47% just exploring. That means a huge chunk of the market money isn't actually tied to solving an immediate business problem right now. That definitely frames the risk we talked about earlier.
It really does.
So let's talk timelines then. How far off is what people call utility class quantum computing? And maybe first, how do we even define that?
Good question. Utility class QC is generally defined as systems that are powerful and reliable enough to be used for actual business-critical production-level jobs. Basically, where quantum genuinely solves a real-world problem better, faster, or cheaper than the best classical computers we have.
Okay, so real-world impact, not just lab experiments.
Exactly. And the consensus on the timeline, it remains pretty consistent. 52% of the survey respondents expect these utility class systems to be available in the next 2 to 5 years.
2 to 5 years. Yeah.
Only a small fraction, about 8%, believe they're either already here or will arrive within the next year. So the vast majority think we're still in that challenging R&D gap before widespread practical use.
Which brings us right back to that critical tension we started with, isn't it? You've got this massive river of government and VC money pouring in, funding these companies, losing hundreds of millions a year,
Right.
all based on the promise, the expectation that these useful machines will show up in that 2 to 5 year window. But if almost half your current customers are just exploring and don't see immediate value, that funding river could potentially dry up pretty quickly, couldn't it?
It could.
How real is the threat of a quantum winter?
Well, according to the folks inside the industry, the threat is growing, and the anxiety is, you can almost feel it. It's palpable. A quantum winter, remember, is usually defined as something like a greater than 25% drop in investment that lasts for more than 3 years. A serious contraction.
Okay.
Almost half of the survey respondents see at least some chance of this happening. But here's the really critical shift. The group seeing a very high chance of a winter. That jumped significantly. It was 14% last year. Now it's up to 24%.
Wow, nearly a quarter to see very high chance now.
Yeah. So the people building the machines, they themselves are getting increasingly nervous about whether the funding lifeline can hold out long enough.
And just to add another layer of complexity. As if a tricky technical timeline wasn't enough, there's this huge new competitor for attention, and maybe more importantly, for corporate R&D budgets. I'm talking about generative AI.
Ah, yes, the elephant in the room.
How are things like LLMs, large language models, impacting end-user interest and investment focus when it comes to QC?
It's seen as a major distraction, frankly, because generative AI is delivering results tangible, often commercially valuable results right here, right now.
You can use it today.
Exactly, you can use it today. And 47% of the respondents in the QC survey see LLMs and generative AI more broadly as a near-term competitor that will draw attention, resources, and R&D budgets away from QC end-user interest. That's up from 42% last year.
So nearly half see AI actively pulling focus from quantum.
Yes, and it really highlights the pressure on quantum computing. They need to move beyond just exploration and start delivering clear, competitive performance gains, and do it fast, before the market broadly decides that AI is simply the better, more immediate investment for their limited R&D dollars.
So let's try to wrap this up. For you, the listener, trying to make sense of where this incredibly exciting but also volatile industry is heading. What does it all mean? We have on one hand a market projected to accelerate really fast, maybe hitting $2.2 billion by 2027. It's driven by huge strategic investments from governments and VCs funding these expensive on-premise hardware deals.
Right.
Big growth numbers, big investments. But on the other hand, it's an industry built on a foundation of massive financial losses right now. A huge chunk of the end-user interest is still purely exploratory, with no near-term payoff expected. And the people building the tech are themselves getting more worried about a potential quantum winter hitting in the next few years, potentially exacerbated by the immediate appeal of AI.
That's the core tension, exactly. It really boils down to the motivation of the buyer versus the timeline of the technology. All that funding needed to sustain those huge losses. It's basically banking on the assumption that the 47% doing exploration today will convert into production users within that 2 to 5 year window when utility machines supposedly arrive. The big lingering question for the whole market is, will the governments and the VCs keep writing those enormous checks? Will they maintain that critical high-stakes subsidy long enough for the tech to mature? Especially when powerful, immediately useful distractions like generative AI are right there, sucking up the oxygen, the talent, and the investment capital from the room.
A race against time and against expectations.
It really is. If that exploration phase turns into impatience before the utility class machines deliver clear value, then those growth projections won't matter much. The quantum winter could become a reality.
A fascinating high-stakes situation to watch. Thank you for watching today. This was QN News Deep Dive.